Welcome, everyone. Hello, I am Kate Drain, Head of Growth at Raise Green, and we are so excited today to talk about leveraging donor advised funds. I'm also very pleased to introduce our amazing presenters, Jackie Logan, co-founder, CIO, and CEO of Raise Green, and Rick Davis, co-founder and managing partner of LOHAS Advisors. They have a brief presentation, then we'll open it up for Q&A at the end. So please do add questions to the Q&A tab, and we'll answer them after the presentations. Without further ado, Jackie, take it away.
All righty. Pleased to be here and hope everybody had a nice Valentine's Day yesterday. Maybe we will pop to the first slide. So there may be folks in the audience that don't know Raise Green so well, or those that know us somewhat, but either way, I'll just give you a few words on Raise Green. So as Kate mentioned, I'm a co-founder here at Raise Green. And Raise Green is on a mission to accelerate the green energy transition, but we want to do it in a very specific way, and that is by democratizing access to capital and democratizing access to make investment in this transition. And the origin of Raise Green itself is basically very simple. We want to get more money moving into climate, and we want to get more people involved. Raise Green works with folks across the US who are working on climate solutions, think solar projects, all the way to a new climate tech, who are looking to raise capital, equity or debt, and open up access to investment on our fully online platform to just about anyone to invest in for as little as $100. And that process to invest really just takes a few minutes. We are in a fully registered with the SEC, and we are a member of FINRA. And by definition, we are a crowdfunding portal. And at our core, we are a crowdfunding portal that issues securities under one regulation called Regulation CF. We specifically picked this regulation, which only came about in 2016, so it's relatively new. And we picked it because it is all about opening up access to capital and investing. In the past 3 years, Raise Green has launched 39 offerings, getting close to our 40th, raised close to $9 million for various organizations in the climate solution space, and we've grown our community to over 22,000 folks. And we're super proud about the fact that over 50% of the capital raised through Raise Green to date has been for women-led or BIPOC-led companies. Few words on my background. I'm Jackie. I have 25 years of experience in the securities markets, and I saw in Raise Green the opportunity to leverage my background to get private capital moving directly into climate in a kind of cut through the clutter manner. And I know everybody here that works at Raise Green, we're incredibly dedicated to the mission. We get up every day super excited to work, and we are super grateful to the folks that come in and invest through our platform. So just a little background on why we're doing this webinar today. So Kate, who's our head of growth, has been out there talking to investors through Raise Green, and as well as potential investors, and hearing from them kind of what, on their impact investing journey, what are some of the things they'd like to know or hear. And one of the things we've learned is that people want to understand more about ways they could potentially invest into offerings on our Raise Green platform. And so we recently did a webinar on self-directed IRAs as a potential vehicle for investing. And today we're going to talk about donor advised funds, also the acronym of DAFs. Next slide. So of course, the compliance, the purpose of this webinar is purely educational and informational in nature. It's not tax, accounting, financial, or legal advice. And you should always consult with your tax or financial advisor for your particular circumstances, whether a donor advised fund is a good choice for yourself, and how to manage it. And just to note, this is not a comprehensive view of all the different possible ways you could set up charitable to meet your impact investing and charitable goals. We're really just going to narrow this today to DAFs, but know that there are other things out there, and that's something you can discuss with your advisor. Next slide. So what is a DAF? And I'm going to move. I have two screens here, my large screen, which I can see, and then my smaller screen where my camera is. But just a couple of words, what is a DAF? A DAF is a donor advised fund. They are philanthropic and social impact investment tools that allow donors, and they could be individuals, it could be families, it can be corporations, it can be any combination thereof, to fund special accounts through a sponsor organization or a DAF organization. And donors can receive an immediate tax deduction for a donation that they make, and maintain advisory privileges over both what their donation, which now sits in a fund, what it's going to donate to, as well as while the funds are sitting there in advance of being donated, what will they be invested in? And that is the high level what a DAF is. Next slide. So a couple of things, as I just mentioned, when you donate, and again, these are generalizations. One is going to, every DAF that you're going to look at may be slightly different. So it's always very important to look at the specifics of any particular DAF you're looking at. But high level, generally, you make a donation, and that is eligible for an immediate tax deduction within the year the contribution is made. There may be some limitations, et cetera, but that is just high level, the beauty of it. Then you have the ability to invest the DAF funds, which grow actually tax-free. So, if you invest in a bond, the bond comes back with returns income. That income stays in the DAF, and it is not taxed. It just grows and grows, and that money can then be reinvested, or it can be donated. And it's a way to, so your funds that are your income and your returns, dividends, whatever from your investments, stay in the fund, and they grow tax-free, while you get to decide where you would like to donate and to charitable organizations. And the concept here is that you can actually potentially grow your charitable impact if indeed you invest in things that are, one, related to what your ultimate mission is, and then secondly, if those investments actually do a nice return on your investment. It can simplify handling donations because you donate your money, it sits in a pool, and then as you decide where you'd like to donate, you work with your DAF sponsor and identify where you want to donate, and they handle that for you, those transactions. It is one of the fastest growing philanthropic vehicles in the US right now, with over 250 billion in assets, growing all the time. And it's the other very interesting concept or feature about this is that you can actually donate non-cash. You can use non-cash donations, such as stock that you own that has accreted in value, real estate holdings, collectible art, or even cryptocurrency. This is all dependent on the DAF that you're going to work with. They'll tell you what they'll allow or not allow. Almost all do allow cash and stock. But high level, you can think about that there are a lot of different ways to donate and then receive an immediate tax deduction in that year. Some DAFs also may allow and/or accept transfer from an existing DAF, right? So if you find you're working with one DAF right now, you find another DAF that you'd actually like to get, gives you more flexibility or different choices to invest in or whatever it is, and you already have made your donations, some DAFs will actually allow you to transfer as a donation, if you will, to the other DAF. And then you can open up a DAF somewhere else. And of course, the point of this educational webinar, it is a way to use donated capital to explore the world of impact investing. And we can hop to the next slide. So you'll have to forgive how this looks because I made it and I'm not an expert in PowerPoint, but high level, I found for myself to wrap my head around what these are, I needed a bird's eye view and simply said, here is how I look at it. First of all, it starts with a donor or donors, right? That could be an individual or an entity. In this case, I've identified Jane Smith. And she has some cash and some stock. Maybe she had purchased that stock many years ago, for $10, and now it's worth $1,000, right? She has stock that's worth $1,000, and she has cash worth $1,000. She can take that and she'll identify which DAF which sponsor would I like to work with. That analysis we'll put a pin in that. Once she's selected the DAF, I've called my DAF here, la 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 DAF. A DAF is a 501c3. It's a charitable organization. So when Jane makes that donation, if you will, to the DAF, it's a donation to a charitable organization. And the DAF organization is sometimes called a sponsor, and they are going to maintain and operate your account and all the funds that are donated to that organization. They set up you will have your own individual account with that DAF. And so you will know exactly what you've donated, what is the value is in there, and a history of everything that you will invest in through that DAF, as well as where you will have donated. And that is the organization you will work with in order to decide what you're investing in and where you're donating. And again, each DAF has different rules and policies and procedures around what you can do, but you'll have to see what the availability is of investments and rules around that. And of course, on donations, some of them will qualify what kinds of donations that are within their qualified group, but high level investments and donations. And that picture for me has been super helpful. And the key thing here is that the relationship between you and the DAF you become kind of an advisor, if you will, and you get to advise the sponsor on how you would like to donate to a charity and how to invest the cash that's sitting in your account while you decide where and when you want to donate your funds. Next slide. So, and this is how Rick, who's here, who's an expert in DAFs, how he sees the world breaking up. And this may be familiar to some of the folks on the phone, on the video, but high level, kind of the largest of the DAFs are going to be associated with investment firms. Some of the common names are Fidelity, Schwab, and Vanguard. Then there are community foundations. Here are a couple of names here. There are cause and nonprofit based organizations like St. Jude's, American Heart Association. And then there are some independents out there that are unaffiliated organizations. And LOHAS, Rick, who's on the webinar with us today, comes from LOHAS. Tides Foundation is another example. And they are going to have their own unique opportunities associated with them. And again, these are just some of the examples just for educational purposes. Next slide. So one of the things that often comes up when when people are talking about DAFs are, how do DAFs make money? and are there any complications around it, et cetera, et cetera. So high level, most of these DAF organizations, the sponsors that are going to be where you will donate the money to, and then they're going to help you, you will advise them, if you will, on where you want to have the donated funds sent to charity, or where you want them invested. Most of them earn fees based on the assets that are sitting in your account. And they also make fees when you donate. There are some transaction fees associated with this. They can vary, and you will, that's a piece of what you need to look at when you are analyzing, which DAFs you want to, work with. But importantly, the costs, the transaction costs, or the fees associated with holding your DAF are going to be paid for out of your donated funds. So you make the donation of $2,000, you take a full off your taxes, and in the meantime, that $2,000, if it's sitting and not donated, it's going to have fees, but the cost of those fees will come out of the assets that are sitting in the fund. You will not have to pay for them separately. And the fees don't impact the tax deduction that you would have received for the donation. And then the one piece of this is where there's been a lot of talk out there, in terms of, are there any hidden fees? One of the things to note is that the choice of the investments that are given to you while your money sits in the fund, they vary, right? And in some of the DAFs that you're going to work with, the only choices you'll have will be for, let's say, in an example, mutual funds that are actually run and managed by an associated mutual fund to your DAF organization. And those mutual funds charge fees. So you can see how and many donors leave a lot of funds sitting in their DAF, because the point of it is they want to take the tax donation right away, tax benefit right away, and then think about where did they want to give over time. And so those funds can be substantial. And so you can imagine that if those funds are then sitting in mutual funds, associated with those organizations, there are additional fees. There is no requirement also to donate like immediately. So you can imagine that some of the organizations are very interested in having you just let your funds sit there. But that is actually in your control as to how often you're going to donate your funds. So those are some of the high level things just to think about when you are looking at a DAF. The other thing you want to think about is you want to work with a reputable firm because you are counting on them to be there and manage your DAF account appropriately. Next slide. And now I'm going to turn it over to Rick from LOHAS, which is a very special kind of DAF. It's an independent DAF of sorts, and to tell you more about how you can think about impact investing associated with your DAF.
Thank you, Jackie. Maybe as just some quick background about LOHAS, we're a firm that operates really at the intersection of impact investing and philanthropy, specifically focused on helping parties use their philanthropic funds to invest in for-profit, private sector, impactful ventures, socially or environmentally impactful ventures, companies, funds, projects, whatnot. LOHAS has been around 7 years, and this is a focal point of ours, is trying to help parties unlock, if you will, their philanthropic funds from being stowed away, as Jackie noted, in a donor advised fund and maybe not utilized, and instead invested in private sector ventures like those on the Raise Green platform. I think you mentioned DAF funds and sitting on DAF funds. We very much have a sort of set it and forget it culture, where you know, we've received our tax deduction and maybe we've forgotten about our DAF funds. And that's a bit problematic because, as Jackie noted, there's now over $250 billion sort of stuffed inside of donor advised funds in this country. And that inflow of funds outpaces the outflow of funds every year. So that number is just going to continue to grow unless we can take a more aggressive stance on things with regard to deployment. We at LOHAS are particularly focused on the for-profit impact ventures and sort of impact investing as the pathway to generate not only the greatest impact, but the ability, of course, to generate financial returns that can be reinvested. So really a sustainable approach to impact investing. And clearly, combating climate change is one of those areas of impact that is of prime importance to us and to our donors and to the parties that we work with. This slide is really highlighting the fact that most donor advised funds, and by most, and when I say donor advised funds, I mean donor advised fund sponsors, you know, most don't allow impact investing out of your donor funds, from their fund. And by most, I mean like 98% of DAF sponsors out there do not allow impact investing out of their DAFs. Those that do, that sort of are in our peer group, tend to have what are, in essence, pre-approved list of investments on that you can authorize an investment into, or minimum investment amounts, which can be quite sizable, you know, $25,000 to $200,000 type minimum investment amounts. And at LOHAS, we have neither. We talk about no menus, no minimums. In essence, we want to give parties the ability to invest in any impact investment they would like to make using their donor advised funds. And so, you know, that's sort of the visual here is, you know, if you believe you're with a DAF allowing impact investing, you may have sort of a limited perspective on what's allowed. When there's a whole world of things out there. And so, you know, that's what we're trying to unlock, is really sort of a democratization of DAF impact investing. I think we can probably go to the next slide. So that background of LOHAS is really what has led to a relationship with Raise Green. You know, we love what they're doing on the platform, and our flexibility around a DAF. We do think we have the most flexible DAF in the marketplace as it relates to impact investing. You know, we will enable the investment of your DAF funds in any of the impact investment opportunities on the Raise Green platform, and we already have. We have donors that have, you know, already invested in offerings on the Raise Green platform, and we hope to see a lot more of that. You know, and as Jackie noted, the A in DAF is advisory, and you're maintaining your advisory rights when you use a donor advised fund. And our donors are making those decisions. They're driving all the investment decisions, and including those to invest on the Raise Green platform. And it's not specific to what that investment offering looks like. You know, is it debt? Is it equity? Is it some, you know, hybrid or whatnot? You know, we're going to cater to the needs of the investment, not to some sort of pre-approved structure. And notably, just sort of that last bullet, you know, we provide at LOHAS, one of the real value adds is support, you know, as needed. Many of our donors come to us knowing exactly what they want to invest in. Hey, I see this thing on the Raise Green platform. I'd like to invest in it. This is how much, and we'll help execute that. Others may have done that or are still contemplating and asking, hey, where can I go to find things that would be good to invest in if I care about combating climate change? And we might say, hey, have you been to the Raise Green platform? You should check that out and see if there are things there. You know, you mentioned this particular interest. Have you note these 3 offerings that may be of interest to you, or you know, whatever it is that is driving their interest. We want to help guide them. Ultimately, they're going to be the ones making the recommendation on where the investment is made, but we want to make sure that we're providing as much support as we can. Maybe next slide. So how does it work? I think this is sort of the only real sort of how-to slide, and then we can get to questions. I mean, it's a pretty simple process. If you have a donor advised fund at LOHAS, you simply request an investment of your DAF funds into the impact venture that you selected. Tell us how much and where you want it invested. We'll review those investment documents, make sure everything looks in order, and then execute that investment using your funds. If your funds, and this is something Jackie noted, I think very important, if you have DAF funds housed with another DAF sponsor, and which would be very common, particularly as Jackie noted in those three largest DAFs, Fidelity, Schwab, and Vanguard, they sort of dominate the market. There's almost $100 billion just inside their donor advised fund. So it wouldn't be surprising if you might already have a DAF at one of those investment groups. It's very easy to transfer those funds over. We'll set up a DAF for you, a LOHAS DAF at no upfront cost. We'll transfer your funds over from Fidelity Charitable or Schwab Charitable at no cost, and we'll enable your requested impact investment. It's really that straightforward. Now, these things don't happen overnight. We have to request those funds be transferred over. We have to wait for the Fidelity Charitable to actually execute on that. Those are things but we take care of all that. It's not something that you have to spend a lot of time on. It's stuff that we do every day. And notably, and Jackie mentioned this as well, any investment returns that you receive, the pro rata returns from the investments you make out of your DAF, the returns flow back into your DAF. So you can then invest in the next deal or donate to the charity that you're interested in. We certainly do both, although parties typically come to us because they want to do impact investing. That is sort of our differentiation. And the graphic here is just an attempt to explain, hey, when a donor, whether that's an individual or a family, invest their funds or their assets. Jackie, you noted some DAFs will take things other than cash. Most will take cash and publicly traded stock, but most do not take things like privately traded stock or real estate or crypto. We do, and so whether it's cash or assets, they get transferred into your DAF, and then you get those immediate tax benefits, but then you're maintaining those advisory rights to make those impact investments of your choice, with the returns on investment flowing back to your DAF, as we said. And ideally that's an ongoing sustainable pathway where you continue to reinvest and grow that DAF over time, continuing to make more and more impact investments. So, that's the high view in a nutshell. If this is of interest, you can go to lohas.org and click on the learn more, click on the contact us if it's something you would like to set up, or just email us at info@lohas.org, and we're happy to answer any questions that you might have about either setting one up or specifically making investments.
Rick, I wanted to just add, because something that just popped in my mind, and we've seen this in the past, and that is the concept of catalytic capital. Crowdfunding, which is what Raise Green is, raising capital, opening it up to the crowd. There's a momentum aspect to it. And one of the wonderful things about impact investors who feel compelled to support a project, those investing in committing funds to a project or a company or something in this space actually has the ability to catalyze other investment. So I just throwing that out there, that it is a way to think about not only impact investing, specifically, with the potential for return, et cetera. And of course, there's always risk, and one always should read the risk on any investment, but also the concept of being catalytic, of being able to, start the process, and then others might join. Just wanted to throw that in.
Absolutely.
All right. Well, thank you both so much, Jackie and Rick. We are so excited. This has been incredibly informative, and I learned so much every time when I get to hear from both of you. So right now we're going to open it up for questions. We're also very pleased to have Jared Gonski, who is the partner and founder of LOHAS as well, to join us for this Q&A section. We have a couple of questions already here in the Q&A, so feel free to continue to add to them. So first off, the first question is from Michael. Hello, Michael. His question is, can you access funds if needed and take taxable returns, or are all funds and returns strictly charitable? If so, what are the instruments for impact investment that are not strictly charitable? I'm interested in impact investing, but don't have enough stability yet for myself and charitable donations at any scale.
Jackie, this may be for you.
Well, and correct me, Rick, is that my understanding is that if you do donate to a DAF, you can't get those funds back. It is, and would you agree with me
For the
on
most
that?
part, that is correct.
Okay.
The value you get is both the tax deduction and then that ability to guide where those funds are deployed later, but not the financial returns from those investments. Those financial returns flow back to your DAF where you can continue to deploy them. Of course, that's very different than your platform where investors can come and make investments and presumably receive those returns, correct?
That is correct. They will, assuming the investor on the platform is not a DAF, if you invest as an individual in an offering on our platform and you receive, it is you will receive the returns directly. Now, the one thing to note is that investments on Raise Green or most private securities are not liquid. So if you make an investment, I would not, any funds that you absolutely need to have access to, I would not make it. I don't want to give advice, but as a general matter, you want to be very thoughtful before you invest in a private security because they're not like a public security where, oh, if I bought something and then if I'd like to sell it, you can go to the public markets and sell it. There's a huge, so high level DAFs, once you donate, it's not like you can't like break it, and take your money out and back. There
Right.
are a lot of generally, and Rick is going to probably correct me if I'm not right.
No,
Yeah.
you're absolutely right. I mean, that's one of the virtues that you just laid out is one of the virtues of the catalytic capital aspect that you mentioned previously. And one of the virtues of investing in DAFs at that early stage is that it's 100% risk-free. And what I mean by that is you've already given the money away. You've received your tax return. No matter what happens with the investment, it has no impact on your underlying portfolio. Whether it's a fabulous success or not, the returns are only flowing back to your DAF. It has no, there's no potential for adverse impact on your own portfolio. Now, it is a great way to invest in early stage companies such that they get to a point where maybe you feel more confident in investing directly in them. And maybe it's that next round or whatever it may be that gives you greater confidence, or maybe they've hit certain milestones that you feel more confident investing with your platform, out of your platform, out of your portfolio. But DAFs can be a nice, risk-free early stage investment tool for those reasons.
And just there's tons of ways to engage in impact investing. When you think about it on the Raise Green platform, if you feel like you want to participate and you have a small amount of funds that you feel comfortable investing without, you can do it for very small amounts. And there are no transaction fees fundamentally on Raise Green. So if you wanted to do a little impact investing and wanted to do $100, for example, that's available on our platform.
Okay, great.
Jackie, don't you also have bonds that have shorter time frames?
We do.
Well, so quicker liquidity.
Yes, there's a variety on the platform, and hope to grow that over time, but you're absolutely right. Some of the investments are very short, so therefore there's, higher, the liquidity associated with that instrument is expected to be relatively soon. But just in general, investing in private securities, investing in crowdfunded securities have risks. So it really has to come down to what your financial objectives are, and your need for liquidity, et cetera.
And actually, I can add one point, just going back to the beginning, an IRA, when you put money into an IRA, you can take it out and there's a penalty. And if you take it out early before retirement, there's a penalty. With a DAF, if you put money in legally, the money actually belongs to the DAF at that point, to the DAF sponsor. You advise how the funds can be used, but it's no longer your funds.
So Michael, I hope that answered your question. If not, please add it again to the Q&A. Our next question comes from another Michael, which is, can you tell us more about the size and performance of your DAF?
Are you talking about the size and performance of of what LOHAS does?
I would assume so.
Yes. So our DAF is administered by a firm called Legacy, which has been running philanthropic programs of a variety of different kinds for decades. And I think Legacy has probably around $1 billion of assets under management across their various philanthropic programs. But our focus is the impact investing sliver of that pie, and we it's not data we share, but we have a lot of parties that we're serving either through our donor advised funds or our fiscal sponsor programs to support impact investing.
I'm not sure if the question is also trying to get at, is there, if you think of a fund, if you were to invest in the Vanguard XYZ fund, at the end of the year, there's a performance associated with it. And
Right.
everybody who is in that fund, has the same performance, basically.
Right.
In the case of donor advised funds, first of all, these are you can think of them as like little sleeves. Whatever your donation was, in the case of Jane Smith, she donated $2,000 to her DAF.
Yep.
And then she, whatever she chose to, if she didn't give it away immediately, but she chose to invest it, it will be the performance of whatever she invested in.
That's exactly right. Yeah, we're not investing in mutual funds on our platform or things of that nature. We're specifically enabling investment in private sector, for-profit, impactful. It could be a fund, it could be an impact investment venture capital fund, could be a company, could be a project. And to your point, Jackie, each one's its own special little snowflake, and how it performs and how your portfolio of investments perform are going to be quite different than the next person who maybe isn't focused on climate change, instead is focused on diversity or animal welfare or oceans or regenerative agriculture or whatever they may have an interest in. And what those individual companies or funds are doing is going to be very different. Yeah, there's no ETFs on our platform. No one's tracking against the S&P. These are all private sector deals that are all going to perform, as they do individually.
On that note, Rick, if you go to a Fidelity of the world, the big institutional, and they provide you their list of approved mutual funds to invest in, let's say, those are professionally managed,
Yes.
right? And there is a certain amount of vetting, obviously,
Yep.
that they've done because, to put them up on their platform and
We would
make them
hope.
available. In the case of LOHAS, can you talk to us about it? It sounds like what is available for folks to invest in is pretty much up to them, as long as it's consistent with the charitable nature of their DAF, i.e. if they're focused on climate or whatever, it's something related. What kind of diligence do you do, if at all, on what donors are, what Jane Smith might select to invest in?
No, it's a great question, Jackie. And the short answer is we're not. We are not providing what I think of as investment due diligence. Now, we can. We're a consulting firm, and we have the capacity to do that if someone really wanted to, pay that cost to do that kind of thing. But typically speaking, these are private sector deals that are up to the individual investor to make their own determination whether this is the kind of thing they want to invest in. Now, we are going to scrutinize certain aspects of the investment to make sure it seems market rate reasonable, and that there's no sort of funny business going on in the investment documents that might put obligations on the DAF, for example. But we're not doing what you're describing as traditional due diligence, where you're going, is this a good investment to make? What are my chances of making a financial return? That's not the sort of scrutiny we're providing. That is incumbent upon the donor to make those decisions. But once again, this isn't public market type products. I mean, Fidelity Charitable can make an investment in a Fidelity mutual fund that's been managed by Fidelity people because these are all publicly traded with publicly available information to invest in. Whereas that's not the case here. Private sector is an imperfect set of information. It's sort of what's available. So if anyone out there has made investments in private sector companies, they sort of understand the playing field there, that you get the investment information, whether it's the private placement memorandum or whatever it may be that they're sharing. You review it and you make your decisions based on your own risk tolerance, interest, and things of that nature. The difference, of course, with the DAF is no matter how it goes, it's not impacting you financially either way, because it's money, as Jared noted, that you've already given away. It's basically monopoly money to you, but very real to the companies that are receiving it.
All right, thank you both. Michael, hope that answered your question. If not, please let us know in the Q&A. Our next question is from Sky. I recently hosted a webinar on DAFs for impact-driven investors, entrepreneurs like myself. We're a climate fintech decarbonizing the manufacturing space. Most entrepreneurs don't know how to find or interact with potential investors. Raise Green is really helping with this. Are there social forums or in-person events where entrepreneurs can let folks know what they're building? Founders keep asking me this question. Sky, I'll start with this one and then open it up to the panel if there's additional. But one thing that for Raise Green, for our recently we hosted an investor day where we had all of the issuers that were on our platform, and they opened it up to our investor community. We had an event where we had around 98 investors come to see. I'm going to put in the chat, there are a few Slack communities that may also be of interest. So this is a lot of climate Slack communities in terms of the social forums where you might be able to connect with potential investors. And then also, if you want to email me specifically, Kate@RaiseGreen, then I can also talk with you. There's going to be SF Climate Week taking place here in San Francisco in April. They're looking for different events to host. And so this might be one that we could even bring up to the SF Climate Week presenters.
And I just wanted to build on that. I mean, one of the beautiful things about the regulation under which Raise Green issues securities for the companies that raise on the platform is that you can actually go out and publicly advertise to anybody that you are raising on the platform, and which is the beautiful thing about Regulation CF. They allow what the regulators call general solicitation. So if you want to put an ad in the newspaper, if you want to join one of these forums and let everybody know at the forum that you're doing it, and you can go on LinkedIn, you can publicly advertise all you want, and send folks, if you have an offering up at Raise Green, and send them to Raise Green and for them to consider investment. So that is one of the nice characteristics of Reg CF for, you know, entrepreneurs looking to raise capital into their company.
Jackie, that's a really important point. Do you mind taking one step back and just helping for entrepreneurs to understand the non-solicitation for investment? Like just the one step before the Reg CF, just that that you aren't allowed to solicit publicly for fundraising.
Well, you know, there are two things to think about. Number one, there are if you are fundraising already and you're engaged in an offering, if you will, there are different, assuming you're not, as a young company, you're not going to be doing a public offering, fully registered with the SEC, but if you're using some sort of exemption to registration in order to issue securities to the public, some of them actually, like Zip, you actually have to be very careful and limited in how you communicate to people to let folks know that you are fundraising. Reg CF, there isn't that limitation. If you are in the process of considering raising capital under Reg CF and a few other exemptions, you actually can what they call test the waters and, you know, get out there and start to talk to folks that you're thinking about doing a raise. This is what it might look like, et cetera, and start to generate and take a list of folks that might be interested in investing for you. That is available. You have to be careful because there are some regulations around it. So if you were interested in doing something like that, just to what they call test the waters, feel free to reach out to Raise Green. We can point you in the direction of what the rules are associated with that. And of course, anything you ever say as an entrepreneur about your company needs to be, you know, can't be fraudulent, has to be, you know, factual and accurate.
Great. Thank you, Jackie. Sky, I hope that answered your question. If not, please put it.
Actually, Rick, I was thinking for Sky, you know, your point about the two-way street of ignorance might be helpful for these founders when they're going around talking to investors.
Yeah, I mean, one thing that we always recommend to impactful companies that are out raising capital, particularly in the early stages, is to make sure, you know, that every individual or family with whom they're speaking about funding, that at least at the end of that conversation, they ask them, do you have a donor advised fund? And were you aware you could be investing that money in my company? You know, because as Jared noted, and we also encourage them to ask things about, do you have a private family foundation? And did you know that that grant money could be deployed as investment in our company? But DAFs in particular, what Jared talks about with the two-way street of ignorance is that DAFs are anonymous. You know, I mean, one of the virtues, we didn't talk about it on the webinar here, but you know, they are anonymous vehicles for donation, meaning there's not a database you can go to and go, how much money does Jackie have in her DAF? Like that doesn't exist. The only way you would find out if Jackie had a DAF is to say, Jackie, hey, I'm interested in raising money. You know, this is my company, it's what we do, it's going to be great. Do you have a donor advised fund? And if so, did you know you could be investing that money in my company? And the two-way street of ignorance is what we've tried to clear up on this webinar, which is most people don't know they could invest with their DAF into a company like that. And by most, I mean like 99% of DAF holders out there probably don't know they could be investing those funds in a company like one of the companies on the Raise Green platform or one of the entrepreneurs in Sky's question. And so it's incumbent upon them to ask that question so that not only do they find out if there's a party out there that has a DAF that could potentially invest, but so that the party themselves know that that's a way they could be using their donor advised fund.
And that's the point of this webinar, really, is like, this is an amazing thing to know.
Yeah.
Sky said, thank you. And that so many founders don't know about DAFs as a source. So thank you all for doing this webinar. Thank you, Sky.
Thank you for the question.
Our next question, and then Sky said, so true, most DAFs don't know. Most founders don't know. So good to have this webinar. Thanks, Sky. And the next question is, when or why might I want to involve my family in DAF deployment decisions?
Yeah, that's a really good question, and one that we're very keen on, because one of the ways DAFs can be used in the impact investing realm is not just to make impact investments, but as sort of family investment education tools. So if you've set money aside in a donor advised fund, and you have a child or a grandchild or a mentee of some sort that you would love to impart wisdom upon of how to invest, donor advised funds are great testing grounds, because, as I said, the money's already given away. So, I mean, it has no, however successful or unsuccessful it is, has no impact on your portfolio. But it does give you an opportunity, and goes back, Jackie, what you were talking about on due diligence, to start talking with parties about how do you source deals? How do you do due diligence? How do you track investments to see how they're performing, on an ongoing basis? And here you can do this with money that has no impact on you, but is very real to the investees that are receiving those funds, but allows you to use that time, use that money, that pool of money, to be able to teach investment skills to your children, grandchildren, or, like I said, mentees. The other thing we find very much in the same vein is impact investing in particular can be a great bridge builder in this way within the families. It's not uncommon to have older generations maybe not embracing some of the climate change type issues that the companies on your platform are addressing, and maybe younger generations that do, but really don't know much about investing. So it's an opportunity to say, hey, it's a chance for me to teach you something that you might not listen to me otherwise, but in the context of something you actually care about, that you would like to see. So it's actually something we've seen time and time again of a way that, suddenly parents are working with their children, or grandparents working with their grandchildren, something where they're both sort of interested in what's going on and what's being taught and learned and ultimately accomplished.
Rick, can I ask you a question on this? Do DAFs make it available to have other family members sign up to directly make decisions on a DAF? And could that be someone under 18?
Under 18, I assume so, but I don't know. That may not, but ultimately, I mean, if we're talking about bridge building here, ideally it's something that the group is making a decision on, like, hey, we collectively have thought about how to source deals that are of interest. We've looked across the Raise Green platform. We found one or two deals we really like. We've taught, like, what should we be looking for when we do that? What are the things that we're going to value, and analyze, and now we have decided these are the investments we're going to make. And so whoever actually pulls the trigger and says, hey, LOHAS, have our money invested in this company or companies, hopefully is the less important part, and the more important part is the sort of collective effort to get to that point.
And Jackie, I'll just say from a technical standpoint, when a party sets up the DAF, they decide who are the decision makers and who are the advisors on the DAF, and they also, of course, decide who are the beneficiaries, the succession plan for the DAF, and those decisions can be made up front, but also can be changed at any time, similar to an IRA.
Thank you.
All right, great. So hope that was helpful for whoever asked the question. If not, please put it in the chat. And then the next question is, what is the first step to invest through a DAF into Raise Green?
Yeah, no, I mean, as I said, that's something we've done. So the first step would be to have a DAF that would allow that, and clearly at LOHAS we do. So the first step could be setting up your LOHAS DAF in that regard, and if necessary, transferring money over from an existing DAF if that's something you want to do, and then identifying with us, hey, this is the company on Raise Green that I'd like to invest in, and this is how much. And then, as I said, we'll review those investment documents if we haven't already, meaning if a previous donor has already said, hey, I want to invest in that company, and we've already done that, then it's going to be a very quick process because the review's already occurred. It's presumably the same investment documents. But otherwise, maybe it takes a couple weeks to review those documents, assuming there's nothing that jumps out at us. One of the wonderful things about doing something off the Raise Green platform is you guys have already done that review. Like, you've already done some level of scrutiny yourself. So we, that expedites that overall process. But there's a review, and then the documents are signed, money changes hands, and that's how it goes.
But Rick, in that case, it's not the job of the donor advisor, if you will, which is the person who donated the fund and opened up their account. They tell you what they'd like the funds to be invested in, and they're out. Then you do all the rest of the work, and you
Yeah, there's nothing for them to do at that point at all. I mean, they've told us, I want X thousands of dollars invested in, company Y. We review that and execute on that.
And is it
and let them know when it's done, and then say, hey, it's been executed, and let's track and see how it does.
And two questions on that. How would they communicate that? Do they just email you and say, hey, jump on Raise Green, I'm interested in XYZ, or jump on this, there's this other thing I'm interested in, it doesn't have to be on Raise Green.
Once they have a DAF, there's an online platform for them to communicate with us, or they can email if they feel more comfortable with that. I mean, really, whatever is easiest. It's important to note, though, that it's not like a public market. Hey, I'm buying a stock. I'm not, buying shares of. These are private sector companies, so they all have their own sort of investment documentation and processes and what you're getting. And so it's not a, we sort of are in a digital age right now where everyone expects some instant gratification of, hey, I clicked a button and Amazon's on my doorstep. These are things that, take time to review and to execute upon, but hopefully are more rewarding in the sense that you're investing in things that are actually intended to generate meaningful environmental impact. That's the real goal here.
And I would just add one thing. I'm not sure if it's important to anyone on this call or not, but you because it is a DAF, you have the option of investing anonymously if you want. And when we make the investment, we ask if if you'd like us to inform the investee, who's making the investment behind the DAF or not. And so that's at your discretion.
Okay, great. We are right at time. And so Michael, I sent you a private message. Please email us with your question. We want to make sure to get it answered, but unfortunately we have run out of time. But thank you again. Thank you to our wonderful panelists. Thank you to LOHAS. Thank you to Jackie. Thank you to Rick. Thank you to Jared. Thank you to Lauren, our Master of Ceremonies. And thank you to all of you for taking the time to listen to us and to hear about DAFs today. As you have questions, we're all available. So please let us know. And thank you so much.
Thank you.
Yep. Thank you. Look forward to the follow-ups.
Yep.
Bye, everybody. Thank you so much.
Bye.